Good morning, everyone. I am Bhavna Sharma, Assistant Professor, Department of Commerce, General Greater Noida. In financial accounting, we have started with the preparation of financial statements. We have already covered trading account in the previous lecture. In this lecture, we are going to cover the profit and loss account. Profit and loss account records all the indirect expenses on the debit side and indirect incomes on the credit side. So from the name it is clear that the company will be able to know the net profit earned during the year or net loss incurred during the year. So it is very necessary to prepare P&L account to pay the exact income tax to the income tax authorities, and to know the actual profit of the firm. It is compulsory to prepare P&L account. If the P&L account is not prepared, the balance sheet can also be not prepared. And in case of limited companies, the dividend has to be distributed out of profits. So the company always wanted to know what are the profits of the company. Now this is the format of P&L account. So it is also a nominal account. So all the expenses will be recorded on debit side, and on the incomes will be recorded on the credit side. So we have prepared the trading account in previous lecture. So if there is any gross profit in the trading account, then it has to be transferred on the credit side of P&L account. And if there is gross loss of the company, then it will be recorded on the debit side of P&L account. And all the indirect expenses, operating as well as non-operating expenses, will be recorded on the debit side of P&L account, like office and administrative expenses, like the salaries to office staff, any expense on printing or stationery, or rent of the office building, audit fees, legal charges, electricity, repairs of the office, etc. Then the selling and distribution expenses, whatever expenses are being incurred on selling the products or distributing the products, like commission to the salesperson, then expenses on the advertisement, bad debts, discount which is being paid by the company, garage outwards, then any other financial expenses, like the company has taken any loan borrowing, so company has to pay certain interest expenses. So that comes under the financial expenses, like interest on loan, the bank charges that has to be paid. Then any kind of abnormal losses, like there is loss by fire or theft, or loss on the sale of any asset or any investment, any other expenses, depreciation, insurance. So all those expenses, indirect expenses, will be recorded in P&L account. So other than production and manufacturing expenses, which we have already recorded in trading account, all other expenses will be recorded in P&L account. And all the indirect income or non-operating income will be recorded on the credit side of P&L account, like interest received, commission received, rent received, any bad debts which is being recovered, any gain on sale of any asset or investment. So after recording all the expenses and income in the P&L account, again the company has to find out whether the net profit is being earned or net loss is being incurred. So if the income are more than expenses, then the company will get net profit, and if the expenses are more than income, then the company incurs net loss. So whether there is net profit or net loss, that is to be transferred to the balance sheet. Thank you. That's all for today.